Splendid evening it is to viewers. Welcome to Equity News on Equity Access, your business and economic insights in Zimbabwe and beyond. Thank you for joining us as we broadcast live from Hampton Studios in Harare. I'm Ibn Mabunda. Let's get started. The Zimbabwe Tourism Authority says Zimbabwe is under-hoteled, thereby presenting opportunities within the Zimbabwean hospitality sector. This was expressed by the Zimbabwe Tourism Authority Chief Operating Officer, Mr. Givmo Chidzidzi, at the Zim Real Property Investment Forum held in the capital during the course of the day. The event was attended by real estate players from Zimbabwe as well as from beyond our borders. Zimbabwe's tourism sector generated more than $1 billion in 2018, in a year that saw a significant increase in the number of international tourists coming into Zimbabwe. The local tourism industry generated 330 million Zimbabwean dollars, thereby also presenting growth prospects where the country is concerned. Now, the stats look as follows. Zimbabwe has a total hotel room figure of 6,483, which leaves Zimbabwe in a deficit position, especially when there are international engagements and significant events in the country, the likes of the Zimbabwe Trade Fair as well as the Agricultural Show, among other events. Mr. Chidzidzi called upon the real estate industry to explore hoteling infrastructure. Let's have a look.
Looks at the capacity in terms of accommodation. Zimbabwe is seriously under-hoteled. That is a fact. We've got a total of 6,483 rooms in the country, which is fewer than the capacity in terms of accommodation. Zimbabwe is seriously under-hoteled. That is a fact. We've got a total of 6,483 rooms in the country, which is fewer than the rooms that you have in the central area in South Africa. And I think that points to a very serious gap. You only need to think about Bulawayo during trade fair time. I'm sure all of you have had a nightmare trying to secure a room for trade fair and trying to book for next year. I'm sure, and I can bet my last dollar you won't find a room if you have not already booked for your visit to Bulawayo for the trade fair. And the same goes for Harare. If there's a big conference in Harare, we have serious problems. Victoria Falls, the same. In 2013, when we had the General Assembly for the UNWTO, we had to co-host with Zambia to try and bridge the accommodation gap to accommodate the delegates. And I can also give another example. There is a hotel in Las Vegas, the Aria Resort and Casino, which has got a total of 4,004 rooms. That is just one hotel. And here we are talking of 6,000 in a whole country. So I think the real estate industry and the investors, there is quite a big challenge here. And I think we'll be talking about the offices in town being empty and buildings, or the people moving out of the CBD. They present a very big potential in terms of providing accommodation or redeveloping the CBD and trying to
Now, also from the forum, real estate players advocated the need for construction companies to embark on construction projects that facilitate the use of alternative sources of energy, particularly solar energy, in a bid to address the power concerns that grip the country. Speaking at the event was a South African player, Chilufya Lombe of the Green Star, who encouraged construction companies to erect green efficient buildings. Our Equity Access team was on the ground. Let's listen.
Sustainable fuel. So I think the idea of it is very simple. Generate as much as you use. So unlike a lot of the different green building programs that we work with that have many definitions, this is pretty simple. You have to offset all your usage. Now, where the complexity comes is how much do you have to offset. So typically there's this idea of an energy efficiency gap. So what is the difference between what you can generate on site versus what your building uses? A common misconception around this idea is that you need a lot of solar power, or you need to come and put lots of very complex systems into your building. When it comes to a net zero process, it's actually very simple. Energy efficiency is actually the most important aspect of this process. So what will typically happen in a normal green building process is that you're trying to get a percentage saving over a particular benchmark, which means when you've gotten that saving, you don't have to optimize your building any further. Whereas when we're looking at net zero buildings, in fact, you have to optimize your building to a level beyond which you've ever done before you can do the offset. So if there's a couple of things that you take away from this talk is that this net zero carbon, net zero energy is not about solar panels, it's about extreme energy efficiency, kind of sustainable.
Below 15% in terms of capacity utilization. This has been the result of a combination of foreign currency shortages, power cuts, as well as inadequate supply of soybean from farmers. Earlier in January, the company, which also manufactures soap and margarine, shut down operations for lack of raw materials and failure to service an outstanding $11 million debt in the face of crunch cash and foreign currency shortages. The company has received just over 10,000 tons of soybeans from farmers against a total crop of 35 to 40,000 tons. Beyond our borders, Anglo American Platinum, which is parent to Unki Mine, gets Section 11 approval for disposal of a 33% stake in the Royal Bafokeng Platinum joint venture. In Kenya, the Central Bank of Kenya and the Central Bank of Singapore signed an agreement to promote digital infrastructure development in Kenya. Singapore will assist Kenya in establishing basic digital infrastructure such as identity and know your customer utility based on share standards. The agreement was signed by the CBK Governor Dr. Patrick Njoroge and the Managing Director at the Monetary Authority of Singapore, Mr. Ravi Menon, during the recently concluded Afro Asia FinTech Festival. Now this concludes our evening news bulletin. Up next is a look at the news under News Review. Please stay tuned.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.
Welcome back, viewers. It's now time for News Review, and with me is economist Tinashe Kaduo. Tinashe, good evening and welcome to the show.
Thank you, Eben. Good evening.
Superb. Now let's get to the key issues of the day. Olive Industries is operating at below 15% capacity in terms of capacity utilization. What is your perspective where this particular development is concerned?
If you look at Olive, it's actually used to be one of those bigger industries actually in the edible cooking oils manufacturing. But looking at the issues that have been affecting olivine over the past couple of years, one of it is to do with the legacy debt, as well as low production of soybean and even cotton in the country. Over the years, we have seen the country struggling to meet the national requirements in terms of soybean, and this has actually constrained its capacity. Then as well, we have seen also power outages, as well as the impact of high debt that it had accrued over the past couple of years. But it's actually a company that has been on an impressive turnaround following its disposal to a foreign partner, that company from Tanzania. So over the years, we have seen olivine trying to resuscitate or coming up with broader products in the market. But of lately, sadly, looking at what's happening in the electricity, in the energy sector, then you also look at what's happening also in the fuel subsector as well, then also in the farming sector, where your soybean is at its lowest ebb. That's some of those things that are affecting olivine. Then foreign currency shortages also has constrained it, in such a way that it's not able to import that key ingredient, which is your soybean.
But it looks like there are several players across the field who possibly suffering the same effects, the lack of the foreign currency affecting the ability to actually be productive. Earlier on, Capri was out at a CZR platform explaining how they had to shut down their operations for several months just to ensure that they can perhaps put their house in order where forex issues are concerned.
Yeah, it's actually a serious issue in this economy. But we have seen its competitors actually getting on the ground, trying to contract soybean farmers to undertake that crop production. We have seen the likes of United Refineries actually being very active in the market, contracting soybean farmers. Also Parogate, and to mention just a few, those are some of even National Foods is actually very aggressive in that area as well. But I think for olivine, it should also maybe try to go that route where it would actually contract farmers to undertake production of that crop. But looking at its balance sheet, the issue of debt, that's one of the main worries of that company.
I realize. Now let's talk about the Zimbabwe Tourism Authority advocating for real estate players to invest in hospitality.
Yeah, if you look at the developments specifically in Africa, specifically pertaining to African countries where we are pushing for a continental free trade area, I think that would help, especially if those real estate players invest in hoteling and in hotels per se. If you look at the country, over the years we have been seeing an increase in terms of international arrivals, especially in the tourism industry. I think in 2017 we were around 400,000 international arrivals, which rose to 550,000 in 2018. If the number keeps on increasing, if the macroeconomic environment and the political environment remains stable, we might see the number coming up. And also the push by the authorities to make Victoria Falls a special economic zone, focusing much on tourism and a financial safe sector. I think that would also drive your arrivals, your foreign arrivals upwards. Then if you compare to available rooms per se, you would see that the actual number, or even the bed, the available beds, and as well as the available rooms, it's actually very low when you compare to the push that we are trying to drive as a nation. So if you join that with the push by the African countries to have a continental free trade area, it means that the movement of people would have been enhanced. And looking at Zimbabwe, I think we have a comparative advantage when you compare over our peers in terms of tourism. So I think it's actually a concern there, and I think the cause by the players for for real estate investors to look into that space is actually noble.
Okay, you spoke about Zimbabwe vis-a-vis our competitors. Okay, just slightly beyond our region, I'll talk about Kenya. Kenya has pretty much a political setup that is similar to that which we have in Zimbabwe. Slight differences here and there, but key is how they have been able to make Kenya an investment hub, a place where the international community finds comfort in investing. Now, just recently, the Singaporean government is engaging on a digital infrastructure drive together with Kenya. Would you want to shed your perspective where this particular development is concerned?
If you look at Kenya and the East African community, I would start maybe with the East African community, the EAC, where Kenya belongs in. If you look at that economic bloc, it's one of the most advanced or the most developed in terms of those regional economic integrations. What has been driving EAC is, those harmonized policies that it has implemented. You look at EAC, they actually, those countries, they have, a common budgets where they do their fiscal policies or announce them or publish them at the very same day and the very same hour. The Rwanda, your Kenya, your Uganda, and your Burundi, those are the members of the EAC. And you have seen that region has been developing at a faster pace on an yearly average of 6% over the past 10 years or so. So that development and that harmony in terms of regional economic integration is actually attracted investment, and I think they are actually working on having a common visa where someone who is maybe from Rwanda can easily access or penetrate your Kenya, your Uganda, and do business freely. So I think that's positive. So you are seeing those foreign players, if you penetrate Kenya, it's now your gateway to the region. You can easily enter your Tanzania, you can easily enter your Uganda, you can easily enter your Rwanda, meaning that the market is actually a bit larger, and it's not, you are not just confined to Kenya. So Kenya as well, if you look at it, it's one of the countries in Africa that has been using technology as a driver to its growth. Its financial services actually and the telecommunications industry was actually a revolution. If you look at the M-Pesa and all other technological developments that has been happening over the couple of years. So I think its joint partnership with Singapore, where they want to develop the digital platforms, it's something that the international community, they are seeing those maneuvers that are being done in terms of development in that space.
Just last month, the president of the African Development Bank said that Africa could generate as much as 300 billion just from investment in the digital space. So from my perspective, this is Kenya's move and initiative to make progress in that particular direction. But then back home, what do we have that keenness? Are we stable enough? Are we taking the right steps in terms of seeing to it that we generate value out of that?
If you look at back home, Zimbabwe perspective, just if we take politics aside, we have seen that our telecommunications companies, the likes of Econet, Liquid, and other players, and even Cassava, they have are trying to revolutionize that industry. We are seeing a bit of traction, a bit of development in terms of digitization. Even the banking sector landscape is actually changing in favor of going digital. So I think there are actually positive strides, positive steps that we are taking towards that step. But you look at the issues that are affecting Zimbabwe when compared to Kenya. Kenya is a country over the past couple of years that had invested much in its infrastructure, your roads, your rail, and stable electricity. And one of the key issues in technology, you have to have your reliable electricity, and it's key there. So when you don't have your reliable electricity, when you have those power cuts, your servers will be down, and you will be off the grid, and you will be off network. So I think those are some of those issues that are affecting Zimbabwe. Then we have also seen some of those are things that I may say are uncompetitive, practices where you see the operators compete more on infrastructure rather than on service delivery. I think the move by the authorities back then to have, those shared, infrastructure where your Telecel, your Econet, your Net One would share infrastructure and then maybe compete on service delivery. Would have, revolutionized that sector. But we are seeing that whoever has invested in certain infrastructure is very much reluctant, to share with a third party or a second party thereby. So that's where we are constrained there. If you look at Kenya's model and some of the countries that are developing very fast, like Zambia as well in terms of technology, you would see that the key infrastructure, which is your boosters in terms of the telecommunications industry, they are actually owned or controlled by a third party rather than the service provider. Those your M-Pesas and your Vodacoms, they will be now actually competing not on the booster per se, but on the service that they are offering to their clients, which is actually an area where we are lagging behind as a nation.
Interesting. Well, thank you, Tinashe, for the perspectives. Thank you, Vera, for staying with us. Up next is a look at the stock markets with Anisu. Don't go anywhere.
Welcome back, ladies and gentlemen, and welcome to Markets Daily on Equity Access. My name is Anisu Chumbumu, your analyst today, and let's get the ball rolling. Now, the stock market today did give up a two-day rally in which was characterized by a bull run, coming off today by 0.26% for both the all-share index and the industrial index. The all-share index did settle at 191.83 points, while the industrials index was down to 640.06 points. Now, this pretty much trimmed down the weekly gains down to 0.97% for both those indices. Now, the top 10 index is down is only up 1.27%, consequent to a slimming for today's actions on the stock market, coming off 0.31 on a day-on-day basis for the top 10 index to settle at 183.24 points. Consequent to that was much to do with an Econet rebound, where it came off 1.45%, pretty much undoing yesterday's gains of around about the same magnitude of 1.4%. Now, Econet did settle at 169.5 cents today, which is 4.66% ahead of its week opening price and 18.74% ahead of its year-to-date opening price. Maybe a couple of more counters to note on the top 10 index, where cassava did come off by a very marginal 0.09%, while Citco International Limited and Old Mutual Limited did mimic each other, coming up 0.12%, while Mponeng then did take a break from its session of losses, coming back 0.01%. Week-to-day basis, 0.69% on the all-share index. This is a 5-day trend, positive 0.69%, positive 0.94% for the minings index, as it did trade stable today, extending its level from prior session of 251.3 in that regard. Now, of about 20 counters that did trade exchange hands today, we had 4 counters that were in the positive, while we had 6 counters that were in the negative. Now, leading the pack of bears today was Edgar's, that did come off 11.16%. They did lament that they did have a couple of reductions in terms of their volumes in their trading update for the 5 months that they recently did mention from February up until June, where they did talk about them also having some sort of enjoyment in terms of their turnover going up, much to do with them being in line with their inflationary rates, where their prices had gone up about 92% by the time that inflation did come out. At the same time, within the same time frame, inflation was up 97%. So it pretty much keeps them very close to the inflationary trends, though they still do realize a loss in terms of real terms. 16 cents. Now, Simbisa did settle at 108 cents after having come off 1.59%. Econet, we did talk about that. OK and Axia did lit up 0.44% and 0.35%. Now, Axia is pretty much into some distribution. Has got a distribution company within their group, which is DGA Transport. It also has a couple of. It also has Transdev being another subsidiary within their group. Transdev has much to do with a lot of vehicle spare parts and the like. That market is somewhat heavily regulated because of how it may seem as if it is a luxury good, much to do with the vehicles that do come through our borders. Now, for such kind of regulation, they do suffer huge duties that do come onto their products, which would probably slow down their business. But then it is inevitable for customers to always come back to them, because once a vehicle is down, it is down, and it needs to be rejuvenated. Now, FMP, Old Mutual, Citco International Limited did come up 1.19%. Trailing FMP was Old Mutual and Citco International, that did mimic each other, coming up 0.12%, while Mponeng did close off the session after having added 0.001% to its share level. Now, for our interbank and forex market, Old Mutual implied rate settled at 10.22 at the close of the day today, much to do with a decline on the JSE, while the Old Mutual counter on the local bourse did come up, causing for a larger disparity there. For our parallel market rates seem to be coming back up. For it to be around about 9.3, with some trades going up as high as 9.6 and 9.8. Some still trading as low as 8.99 and around about 9.1. So you'd find an average of about 9.3 there, while the interbank rate has continued on a very constant path where it is weakening by very marginal gains of about 0.4 for 0.5% on a day-on-day basis. Now the economic review and outlook paper is almost ready and out. By Friday we should have published this paper, and this paper does come along with an invoice. Now, one key highlight of that paper is that we will realize that our foreign deposits at the current moment, most analysts may miss this, but then there is an exchange rate that has been applied to that, so it may seem as if our foreign deposits have been inflated to about 1.2 billion, but our foreign deposits are just about within the same range of about $300 million, which does translate in us still suffering a lot more in terms of the economy at the current moment, which should also just explain how the government has decided to punish a lot of hotels within the Victoria Falls region for them to pay their electricity bills in US dollar. Much to do, these kind of discussions and analysis are to be found within that paper. Do contact us on our email, admin@equityaccess.net, for you to get a copy of this paper. Don't forget to like, follow and subscribe our paper, our pages at Equity Access on Twitter, Facebook and YouTube, and do visit our website www.equityaccess.net. Good evening.